Mimi, what do you want to hear from the Fed head? What do you think you'll hear?
I think we're going to hear steady ahead, basically. No change to the statements that he made after the last Fed meeting, which is that at some point the pace of hikes will have to slow, but their work is not done yet. And I think we'll just get a reiteration of that today.
The front page of the Wall Street Journal, we spoke about this earlier and haven't talked about it in over an hour, but the front page of the Wall Street Journal says that the Treasury yield curve inverts to the deepest level we've seen since 1981. Is that screaming any sort of a message?
Well, I think it's screaming a message, two messages. One, that the Fed is not done hiking. The peak rate path is priced around 5% right now, so that's another 100 basis points of hikes over the coming months. And the second bit is more that the 10-year part of the curve is pricing in some chance of economic slowdown. And it's also reacting to global yields, which have recovered quite substantially since the end of September. So that's how I would put that in context.
What do you think is going to happen next year? A recession coming for sure to the United States or no?
We do have a mild recession in our baseline. That's our base case, but I think that is also the base case that's cooked into the market. I mean, most of the dealer research as well is that's sort of the base case here.
You're also talking about the potential downside for equities here. I know this is a probabilities game. We were talking about that P word, probabilities, with Mike Santoli earlier in this hour. But you think there's what, a 30% probability that we drop 10% from here?
I think that's about right. But in the general context of how volatile equity markets tend to be, that we don't really think that's completely outsized. For now, we're very neutral in equities and fixed income, and we see potential to trade in this range for the coming months as we get more information on where the economy is and what the trajectory of inflation is as well.
You know, it's all such a jumbled mess, trying to figure out what's happening with oil, trying to figure out what's happening with China, whether they're open, whether they'll be able to open, how that all plays out. How do you game it all right now?
So tactically, we're long-term investors, but tactically, we're trying to play a barbelled approach where we have positions in short-term inflation protection, and then on the other side, we're looking for opportunities on very cheap assets or assets that we think are opportunistically poised to perform well. Right now, we think biotech's very cheap. Uranium, we think, has the potential to perform very well. It's hard to store as the globe moves toward cleaner energy. We think that the nuclear energy will give uranium a boost. And Norway, we also think, is poised to perform better on the energy independence and shift away from Russian nat gas story.